FedNow is officially live. Everyone is creating their own blockchains. Decentralized stablecoins keep coming out and growing. Bitcoin mining is becoming more environmentally friendly, and some creators are earning over 100K on Twitter. Let's talk about everything. So, welcome back, everybody. Today's July 20th. We got a lot going on in the industry right now. Not a lot going on in the Bitcoin price though. So we're still sitting at 29,700, down a little bit today, but we've really just been hovering at this, high 29s level and low 30s. So Bitcoin's definitely struggling with the 30K level. I think everyone's just kind of sitting back, waiting and watching for what happens with these ETF approvals. So first piece of news, the Federal Reserve just announced that FedNow is officially live. So if you don't know how FedNow works, the quick rundown, and this is a great article that I'll have linked in the description if you want to read it. But the quick rundown of how it works is basically it's a payment service that the Fed released, and anyone with a master account, which is basically big banks that have an account with the Fed, can actually interact with FedNow. So it's not something that like you sit there and as a customer like interact with. It's something that your bank interacts with, and then they can offer it to you as a service. So FedNow is officially live. Certain banks have access to it and are partnered with FedNow essentially, and they'll start to offer it to their customers. So I assume it'll start to get offered to big customers and then down the chain from there. But basically, it allows for real-time settlement of transactions. The big change here is that rather than being able to transfer money and have it settled within only business hours throughout each day, Monday through Friday, you'll actually be able to settle transactions 24/7, much more like cryptocurrency, for example. So it's not actually like a new coin or like Fed coin or anything, which is what some people are saying, but it's actually just a settlement system that can work 24/7 and is going to get to start offering out to people. So, I think it's interesting, and it's definitely a technological improvement for the U.S. dollar and the U.S. ecosystem. But it's first of all, it's mostly domestic. I don't know if international transactions are eligible, or if they are, it's probably a very specific type of international transaction. So take it for what you will. I definitely think it could be looked at as a step towards a central bank digital currency, but at this point, crypto keeps growing and Bitcoin keeps growing, and I think it's going to start to get more and more interesting to watch what happens, especially with the BRICS countries talking about creating a gold-backed currency. So that'll have to be a topic for another video. But a lot happening in terms of the like adjacent crypto transaction settlement industry. So we had this interesting development in crypto where, Bitcoin came out, then Ethereum came out, and then Ethereum kind of propagated this whole idea, with smart contracts of every crypto project and, game or platform can all have their own tokens. So we saw the summer of everyone creating their own tokens. And now we're starting to see a lot of platforms create their own blockchains. So kind of interesting to see. It's basically like, all these platforms that created their own tokens, they followed this model of like everyone needs a token. And now it's potentially looking like everyone needs their own blockchain and layer two and all this stuff. So apparently MakerDAO has announced that they're launching their own blockchain called New Chain, which is basically going to be a layer two for their governance activities. So, I don't know. I think it depends a lot on the project, much like with does a project need its own token? I think it depends a lot on the project and if there's actual utility in having it, or if it's just kind of like a marketing ploy to have more control and be on the exciting edge of things. But this is something I'm watching, and you guys know I'm big on DeFi, so definitely something to keep your eyes on if a lot of projects start launching their own blockchains. So speaking of MakerDAO, and obviously they have DAI, other decentralized stablecoins are growing. So we're seeing a lot more total value locked being moved into these decentralized stablecoins as opposed to centralized ones like USDC and USDT, BUSD, stuff like that. So it's definitely good, in my opinion, to see these decentralized stablecoins grow. Obviously, we had the whole Luna UST thing. So people do have a bad taste in their mouth for certain decentralized stablecoins, but I've always been a big fan. I use a stable coin called HBD a lot. But I think decentralized stablecoins have a huge role to play, as things grow. I do think there's also going to be a breakout decentralized stablecoin at some point. I don't know which one it's going to be, but if you look at Bitcoin and consider that it's like the digital gold standard, um, and then consider that maybe there should be a digital stablecoin standard. So I'm keeping my eyes on what decentralized stablecoin keeps growing, and who's sustaining growth, and what's backing the protocol, and all sorts of stuff like that. So I'm excited to see more growth in decentralized stablecoins, as well as activity on decentralized exchanges versus centralized ones. Um, Bitcoin mining is becoming more environmentally friendly. So a lot of us know that, back in, I think, 2021, Tesla came out after putting some Bitcoin on their balance sheet. They came out and said that they won't accept Bitcoin payments anymore because of the environmental impact of mining. So if you don't know, Bitcoin mining uses a lot of power. So it does use a lot of power, and that's what's securing the network, is essentially the cost of energy to mine Bitcoin. That being said, Bitcoin mining is one of the way that Bitcoin miners are getting their energy puts them in a category of one of the most sustainable industries in terms of energy consumption. So, they're using a lot of like hydro power and stuff like that, where natural gas power and stuff like that, which is definitely better than a lot of other industries. So I think Bitcoin gets a bad rap for it because obviously, the media loves to tack on and attack. But I've always seen Bitcoin mining as being better than other industries, maybe not perfect. But Bitcoin mining has definitely become more and more sustainable over the years, and it only has continued to get that way. And one thing that's kind of interesting, and this article kind of talks about it, is Bitcoin miners are often able to leverage other means of what they're producing. So what I mean by that is basically Bitcoin miners are generating a lot of heat. They're generating a lot of output that has nothing to do with the Bitcoin side of it. It just has to do with the energy consumption and the rigs that they're running. This article gave an example of like using the heat from rigs to warm up fish farms. And warming up those fish farms makes the here, it's right here, shortens the period of growth for salmon and fish farms by up to 3 times. So just kind of like these random small use cases, and I do think that Bitcoin miners tend to be on the edge of innovation. So when people say that there's like this negative ESG on Bitcoin, I'm not really a buyer of that. I think that Bitcoin is far superior in terms of mining and environmental impact to a lot of other industries. So I think we're only moving towards more and more ESG friendly activities. And a lot of people, companies, and I think a lot of institutions that start buying Bitcoin, Kevin O'Leary came out and said this too, are going to be looking for clean Bitcoin that has been mined with clean energy. So, if that does end up being the case, then, I'm sure some people won't care and some people will, but I think that will incentivize more and more activity in the right direction. So, Bitcoin mining has never really been like a huge concern of mine from an ESG impact standpoint. I think it's more of a negative headline for the industry. Kuwait bans crypto and virtual asset transactions. So this is breaking news today. Kuwait is the latest jurisdiction to ban crypto. I don't really. Actually, I saw some funny tweets that this is like a bullish signal for crypto, because every time a country bans it, Bitcoin goes up. But the more theoretical, or take a step back and look at this, is that you've got FedNow launching, you've got the fear of central bank digital currencies launching at some point in the future, and the problem with that and the fear of CBDCs is that now you're giving the government and whoever wants like full transparency on your transactions. And we saw this whole debacle with the Canadian truckers, I think last year, and that, like, people's PayPal accounts were getting suspended, people's bank accounts were getting frozen. So what happens when CBDCs have clear transparency on who you're giving money to, what charities you're donating to, what you're spending your money on, and how much easier is it for them to freeze your account from that point? So I think all of these things and all of these bans actually just support Bitcoin and the crypto industry in terms of creating a standard that is outside of CBDCs and government control. Something that's a lot more like gold used to be before obviously government started seizing it and stuff like that. So I've long been a believer in the idea that bans like this and governments looking at crypto with this negative lens and trying to get people to stop using it is actually pushing people to use it. So definitely not a concern. I also don't think that this particular market is going to have that big of an impact, but just something to keep your eyes on. And like I said, from a theoretical standpoint, I don't see it. I actually see bans like this as a pro Bitcoin move. So kind of an interesting thing. I threw this at the end here. So Twitter ad checks have started paying out, but there's a huge catch, and people have been making a lot of notes about this. So some creators are earning like over 100K. I've seen some earning like 7K, stuff like that. There's a huge threshold for how many impressions you need to get on your tweets in order to start earning. So what if there was a platform where you could earn ad checks and you could earn 1 cent or 10 cents, and there was no the threshold was extremely low because it used crypto to do the ad checks. And enter Leo Finance, which obviously is near and dear. But that's the entire idea of Leo Finance, is that you've got a platform where people can make microblogs. Exactly, it looks exactly like Twitter, but they earn ad checks, and they can earn even a cent. So you see this one thread is earning 1 cent in ad revenue. So it's definitely interesting when you look at what Web 2 is doing and how it's kind of migrating towards Web 3, but it's not exactly Web 3. So Web 3 is near and dear for me. And if you haven't already, I would check out a platform where you can actually earn, and you don't need 5 million impressions to start earning. But that's all I got for today, July 20th. I will see you guys tomorrow for the July 21st episode. Have a good one.